Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US futures rise after the Fed cuts for the first time this year. 2 further reductions are penciled in. Chair Jay Powell strikes a cautious tone. Next up, it is the Bank of England expected to hold rates, of course. The focus turning to its plans for gilt sales amid bond market volatility concerns. Plus, from pomp to politics, the US president to meet the UK Prime Minister after an evening celebrating the special relationship with the royal family. Happy Thursday. So a risk mitigation cut from the Federal Reserve, an insurance cut from the Federal Reserve. Markets got their 25 basis points, but arguably they did not get full validation from Jay Powell and the Fed, even around the dot plot for the market pricing. Yes, expectations, if you look at the dot plot, for 2 further cuts, but this will be, it seems, meeting by meeting for the Federal Reserve as it continues to weigh up the job markets versus those inflation risks. European equities, though, are on the front foot after a little bit of softness by the end of the close for US stocks. European futures pointing higher by 0.4%. Here in the UK, the FTSE 100 looking to add 0.2%, continuing to keep across the deal flow when it comes to the US and the UK on this presidential visit. Of course, S&P futures stateside looking to add 0.5%, again on the front foot after that cut from the Fed. Nasdaq 100 futures looking to add 178 points. Let's flip the board and have a look cross asset. You saw a move in terms of the Treasury curve of yields higher on that decision yesterday, around 6 basis points on the 2-year. That has been reversed to some extent today. Bonds are bid, Treasuries are seeing flows of money in. The benchmark at 406, yields down 2 basis points. The euro at 117, close to 118, but there is dollar strength in the session. The Bloomberg dollar index up close to 0.2%. Brent at $67 a barrel, a little weaker by 0.3%. And the yellow metal currently down 0.2% on gold. So the Fed Chair, Jerome Powell, citing weakness in the labour market for the change of course on interest rates. The board voting 11-1 for a quarter-point cut. The only dissenter was new Fed Governor Stephen Miran, who wanted a bigger cut. 2 more reductions have been penciled in for this year, but Powell says concerns about inflation remain.
In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. The labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, I can no longer say that. We did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. I think you could think of this in a way as a risk management cut. Inflation, we continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller.
Well, it was certainly no ordinary Fed meeting, that one is for sure. Let's bring in Bloomberg's Valerie Titel, who, of course, was watching all of this very closely last night for us. Val, what were the key takeaways for you? We saw yields up on the back of this. We saw dollar strength. We still see dollar strength in the session today. Some of that has been reversed in terms of the bond market moves with yields a little lower. What did you take from this? Was this a hawkish cut from the Federal Reserve?
It definitely sounded like that in the press conference. Now, I think the market it had a very high bar for what it wanted to hear. It wanted to hear some clear guidance on the pace of rate cuts to come, on perhaps maybe the fact that October they're also looking to reduce rates. And there was not that kind of language. Powell sounded very cautious on the path ahead. The guidance really wasn't there. And then also, when it came to the dissents, I think people found that very surprising that there was only one lone dissenter. There were analysts out there saying that there could have many as 6 dissents in this decision, but it was very interesting that both Waller and Bowman, who dissented in the previous decision, were absent in calling for a larger 50 basis point rate cut. And I found it very insightful when Powell was asked this in the press conference as one of his first questions asked on whether they considered a 50 basis point rate cut. He said there was little support at all for a jumbo rate cut and said when you tend to do those things at a time when policy is out of place and needs to move quickly. And he commented, that is not at all how I feel. So it kind of is telling the market that the arguments from Waller that the labor market is flashing red hot and is in need for dire cuts, that kind of argument hasn't necessarily made its place into the Fed chair's thinking and into the consensus thinking around rate cuts.
Interesting that some of the betting markets are now reduced the odds of Waller getting the Fed governor position after that decision to go for 25 rather than a jumbo cut yesterday. In terms of the dissent that we didn't get to the same extent that many had expected, Miran, no surprise on that front. But to your point, the FOMC otherwise was united on this. And yet there are deep divisions about the dot plot going forward.
Yeah, the projections really showed a muddled message. First of all, they cut rates at the same time, revising up growth and revising up inflation, something a traditional bank doesn't, or central bank doesn't normally want to communicate. And when it came to the dot plots, there is a very wide dispersion on where members see rates into 2026. The market did find some comfort in that 9 members did vote for 2 reductions this year. So the Fed is looking to cut rates at all of the remaining meetings, October and December. But look at Miran's dot, way out of kilter. He was essentially, with that dot placement, was calling for a 50 basis point cut, not just today, but also in October and December. So there's clear different thinkings when it comes to Miran's stance on interest rates. And then when it comes to the wider board, a clear disparity of views when you're heading into next year.
OK, Bloomberg's Sonali. Thank you very much indeed. Breaking down what was a pretty extraordinary Fed meeting, decision, of course, and press conference as well. Let's get the Asian market reaction right now. The focus is also, of course, on tech. Asia equities reporter Winnie Su with the latest. Winnie, what are you seeing?
Yeah, tech is definitely still the story here. But when you look at the overall Asia market today, it's pretty flat. And remember, we've been rising for the past 11 days already. And investors in Asia right now, again, they're trying to wrap their head around what this Fed meeting really means. Essentially, it's a dovish cut with some cautious guidance. And for equity investors, they're really focusing on the fact that there are more cuts to come. And that's going to be good for growth. And hence, we're seeing the strength in tech-heavy indexes, including the ones in Japan, South Korea, and Taiwan. But on the other side of things, when you take a look at currency, dollar strength is there, weighing on most of the Asia emerging market currencies. And we would like to highlight here in Asia, the Kiwi dollar under a lot of pressure because of the GDP numbers really missing estimates by a lot. And hence, investors are betting that there's going to be more easing to come from the central bank. And similarly for Indonesia's rupiah, that's also under pressure because we saw that surprise rate cut yesterday. So overall, with the Fed easing, Asia's central banks are poised for more cuts to come. And again, another day, another China tech story. We saw HS Tech up about 2% today, and reports about how China is telling companies to not use NVIDIA chips for AI, and also Huawei saying that it's coming up with this new AI solution really is kind of boosting the sentiment around the homegrown technologies in China, and also its self-sufficiency goals that it is really pushing forward for.
OK, yeah, as you suggest, it's been a huge week, hasn't it, for Chinese tech, particularly around AI and some of the developments in the mainland. Bloomberg's Asia equities reporter Winnie Su with a check on the Asian markets. Now, Donald Trump's UK state visit will move from royal spectacle to political talks as the US president meets with UK Prime Minister Keir Starmer later today. King Charles III welcomed the US leader yesterday alongside top tech and finance executives for a lavish state dinner at Windsor Castle. US and UK officials have said they expect to roll out economic deals worth billions of dollars to coincide with the visit, including a deal for the first British-built US Air Force aircraft in more than 50 years. Trump referenced the ties between the UK and US in his speech at the state dinner.
We are, as a country, as you know, doing unbelievably well. We had a very sick country 1 year ago, and today, I believe we're the hottest country anywhere in the world. In fact, nobody's even questioning it, but we owe so much of that to you and the footing that you gave us when we started.
Well, Bloomberg's Lizzie Burden is in Windsor, where, of course, she was placed as well yesterday. Lizzie, what stood out to you then from the state banquet and what we heard both from the King and the President?
Well, let me tell you what was on the menu last night, Tom, not just in terms of what they said, but what they ate as well. Organic Norfolk chicken washed down with this transatlantic whiskey sour, a new cocktail made specifically for the occasion. You had round that state banquet table the biggest names of Wall Street and Silicon Valley, the likes of Jensen Huang of Nvidia, Citigroup's Jane Fraser, Apple's Tim Cook, Blackstone's Steve Schwarzman, Rupert Murdoch as well. And what they heard there was not just from the president, but also from the king, noting that Donald Trump seems to like British soil and it makes for good golf courses. He said, "We are kin to the president." And he also touched on some more controversial areas, talking about the need to defend Ukraine and to defend the environment. So really hitting on the fault lines between the US and the UK at the moment at a dinner that really was there to curry favour with the president. So interesting that the monarch should choose to break with tradition somewhat, perhaps, and hold back from that traditional restraint that perhaps we might have seen more from Queen Elizabeth II, the late Queen.
And Lizzie, as we said, it moves from pomp now, this state visit, to the politics and some of the deal-making. What is on the agenda today?
Well, we'll see the president coming from here at Windsor Castle to the Prime Minister's country estate of Chequers, and the tech bosses will be there again. It's all about the business today. We're expecting tens of billions of dollars of investment to be announced specifically on tech, but £150 billion to be invested in total when it comes to the UK investment here. And Starmer's team says that that's a record. It will create 7,600 jobs, which is really crucial at the moment because, frankly, UK growth is in the doldrums. Now, Starmer was also hoping to press Trump's team when it comes to the terms of trade. Of course, they already reached that trade deal, the UK at the front of the queue for that trade deal. Now Starmer wanting to improve upon that, although we aren't expecting any major breakthroughs. And when it comes to geopolitics, he's likely to push on Ukraine, following on from the start the king made there. What he isn't likely to push on, though, is the Middle East. The Times of London reporting late last night that Starmer's going to wait until Trump has departed to formally recognise Palestine as a state. Now, the idea would be to avoid a diplomatic incident, of course, wait until after the state visit, but it would come before the UN General Assembly summit in New York next week. And this is if Israel does not agree to a ceasefire, does not agree to a two-state solution, and does not make clear that it wouldn't annex the occupied West Bank. So that would be his already outlined plan for the Middle East, but we'll see it after this visit. It still, though, Tom, could very much dominate the press conference later.
Which is going to be fascinating, isn't it? Bloomberg's UK correspondent, Lizzie Burden, of course, on the ground for us outside Windsor Castle with the latest. Lizzie, thank you. Here's what else to think about today, then, including that press conference. Before that, 12 p.m. UK time, we, of course, get the decision from the Bank of England. Not expected to change interest rates. Rates expected to hold at 4%. Because any changes around quantitative tightening will be in focus. And, of course, any adjustments to the language coming through from the BOE. At 1:30 p.m. UK time, we're going to get US jobless claims as, of course, the Fed cuts and partly justifies that on a weakening labour market. And at 2:20 p.m, it is the Trump-Starmer press conference. Grab the popcorn, sit back, relax, watch that one. We'll bring it to you live, of course. You can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. On the terminal, all the analysis around the Fed and the market reaction, of course, front and centre for us. Coming up, we're going to look ahead to that Bank of England rate decision with Bank of America's UK economist a little later in the programme. Find out why Sonali Punhani thinks that the BOE will cut once this year and again at the front end of next year. What is the analysis around that? Coming up, though, next, Tesla says it's modifying its car door handles after a Bloomberg investigation found incidents of people getting trapped. Details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. Tesla is redesigning its door handles following a Bloomberg investigation that uncovered incidents of people getting trapped in cars that had lost power. Tesla's design chief told us they are combining the electronic and manual door release mechanisms, which are currently located separately. US regulators are looking at potential defects in Tesla doors following Bloomberg's investigation.
We actually have a mechanical release that's, basically right at the electronic one too, and we're combining the two. So, in the moment that you're in a panic situation, the muscle memory to go to, what is right there. So you just pull a little bit further on the lever and you have the mechanical release. So that's something that we're working on, yeah. And it's in the cars now.
Well, Bloomberg's Asia Transport reporter Danny Lee joins us now, someone, of course, who follows Tesla very closely. Danny, what is Tesla saying then about this potential redesign and the focus from regulators?
Yeah, as you heard from Tesla's longtime design chief, Franz von Holzhausen, speaking to Hannah Elliott and Matt Miller from Bloomberg News, that they are going to make a change to the door handles and to put the manual and the electronic door release in the car in one place. This would make it a lot easier for drivers and passengers during an emergency situation who could be very well panicked, and they have an easier way to escape a Tesla EV. Now, there has been a lot of scrutiny around Tesla EVs, around the doors and the door handles recently, after this Bloomberg investigation last week drew attention to a number of cases where there could have been much different outcomes for people who were in these cars who ultimately suffered severe injuries or a fatality. So this is an interesting development that Tesla is looking to make a change. But I think the key question is whether they are already aware of this change or if it's something that has been prompted by this investigation. But clearly there is a lot going on in the background, particularly as regulators, not just in the US, but around the world, particularly in China, do look at Tesla's doors and door handles more closely.
Danny, talk to us about that regulatory scrutiny then. And you're right, of course, to underline what's happening in China. And they have a lens on this, as do, it seems, European regulators. Is this a Tesla then being proactive or reactive to the regulatory scrutiny?
Yeah, that is really the big question here. And, there's a lot at stake for Tesla. But as what we know right now is only a couple of days ago, the US National Highway Traffic Safety Administration opened an investigation after Bloomberg's reporting. And so they're looking at concerns around the escape mechanism, and in particular cases where the exterior concealed door handle has resulted in children being trapped. So its investigation covers around 175,000 Tesla EVs from at least the year 2021 so far. And so as we see more from regulators looking into this, could we see this grow? And so as Tesla redesigns these door handles, I think the big question for them is whether they can do a change or a fix over the air, these software updates they can do fairly easily, or if it's going to have to recall its cars physically. That would be a much more expensive exercise. And at least if it's done in the US, what are the implications for Tesla abroad? So we're watching to see what do regulators see more into this as we hear more maybe in the months and years to come.
OK, Bloomberg's Asia Transport reporter Danny Lee, thank you very much indeed with the Tesla update, of course. We appreciate it. Coming up, off the air, Disney pulls Jimmy Kimmel live after conservative backlash over his comments. We bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, some of the stories making the news this Thursday. The European Union has agreed to start negotiations with both Canada and the UK to give them access to the bloc's €150 billion defence fund. This will allow British and Canadian companies to participate in common procurements financed by the Security Action for Europe programme. The SAFE programme is part of the EU's effort to boost its defence readiness following Russia's full-scale invasion of Ukraine in 2022. Disney's ABC network has taken Jimmy Kimmel's late-night show off air indefinitely after A backlash amongst some viewers over his comments about the killing of Republican activist Charlie Kirk. In his monologue on Monday's show, Kimmel accused Republicans of using Kirk's death to criticise their opponents. A major owner of ABC TV affiliates, Nexstar Media, has called Kimmel's remarks offensive and insensitive. It is the latest example of a major media company facing pressure from the Trump administration to mind the on-air remarks of their top talent. And the CEO of Bank of America says half as many people are working in some parts of his business than a decade ago, and AI will have an even greater impact. But Brian Moynihan says the bank is changing the way it trains staff so they can be moved to new jobs more easily. He spoke exclusively to Bloomberg's Lisa Abramovich.
If you think of 23 summer, the Great Resignation, it was very tight. Then it loosened up, and it's more imbalanced now. So our turnover rate in our company is running about 8%. It even in places like tech programmers, of which we have 30, 40,000 of them, we're running in double digits is now in 3-4%. And what that shows you, the bid in the market's different, which then shows you people are being more careful at headcount. And you heard some of my colleagues talk to you about that. So I think the unemployment rate is still low, but I think businesses are being much more careful in managing their headcount for a number of reasons. One is to get by understanding how all the policies are coming at them fit together. I'm talking about U.S. businesses mainly. And then secondly, they're also making sure that they're careful, and I heard some of my colleagues talk to you about this earlier. As you think about this application of technology, we know what this does. We have half as many people working in the consumer business than we did a decade plus ago. We have half as many people working operations. We know that as these technologies could apply to our legal department, our accountant, our finance department under Alistair, our risk department teammates, we know that if we manage the headcount carefully, we will do it. So we look at headcount very carefully and say, don't hire people unless you really need them. Not because we're trying to save money, because frankly, from a human management capabilities, we don't want to have people who won't be able to have a career here. So we just hired 2,000 plus kids from school. So we brought in all those new talent. We'll hire these 10,000 veterans. We'll hire these 8,000 people from community college. But each month we get the right to make a decision on whether we're going to hire about 1,300 to 1,500 people, and we're just managing that very carefully.
Bank of America CEO Brian Moynihan, of course. Now to some of the stories making the news today. And Meta has launched the first version of its smart glasses with a built-in screen as it seeks to turn the product into a consumer hit. The $799 Ray-Ban display features a screen in the right lens that can show text messages, video calls, directions in maps and visual results from web searches. CEO Mark Zuckerberg says the glasses will be a vehicle for what he calls AI superintelligence.
Take superintelligence seriously. This is going to be the most important technology in our lifetimes. AI should serve people, not just be something that sits in a data center automating large parts of society. So we design our glasses to be able to empower people with new capabilities as soon as they become possible.
The Australian oil and gas group Santos has had $2 billion wiped off its market value after Abu Dhabi's ADNOC pulled out of a takeover deal. Santos shares fell 14%, 1-4 at the start of trading in Sydney, the biggest intraday fall since March of 2020. ADNOC's decision to walk away from the $19 billion takeover bid is the third time an attempted sale has fallen through. Coming up, the Bank of England is expected to hold interest rates later today, but quantitative tightening could be in focus. We're going to speak to Bank of America's Sonali Punhani about how the market will price it in and why she thinks they will cut this year. This is Bloomberg. Good Thursday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US futures rise after the Fed cuts for the first time this year. 2 further reductions are penciled in. Chair Jay Powell strikes a cautious tone. Next up is the Bank of England expected to hold interest rates. The focus turning to its plans for gilt sales amid bond market volatility concerns. Plus, from pomp to to politics. The US President to meet the UK Prime Minister after an evening celebrating the special relationship with the royal family. Let's get to the markets then. European and US futures on the front foot after what Jay Powell described as a risk management cut yesterday, 25 basis points, but a cautious tone from Jay Powell, and some traders suggesting that this was a slightly more hawkish tilt than had been expected. Nonetheless, European futures on the front foot, up 0.3%. FTSE 100 futures looking to add 8 points. S&P futures, after a little bit of softness yesterday, by the end of the close, looking to add 0.4%. Nasdaq 100 futures also on the front foot. Let's flip the board and have a look cross asset. Pretty pronounced strength coming through for the US dollar on the back of that decision to cut, but cautious, of course, in terms of the outlook. 406 on the benchmark US 10-year after yields jumped yesterday. Some of that is being paired today with money moving back into treasuries. Yields down 2 basis points. The euro under pressure then on dollar strength, down 0.1% at 118 on the single currency, but crossing back above 118, so that's still there as a level. $67 a barrel on Brent, down 0.4%, and gold is largely unchanged in the session. So the Fed may have cut for the first time this year, but Jerome Powell's cautious tone, as I mentioned, has erased any hopes of more aggressive rate cuts to come.
You go back to April and now look at the revised job creation numbers for May, June, July, and August. I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. There wasn't widespread support at all for a 50 basis point cut today. I think we've done very large rate hikes and very large rate cuts in the last 5 years. And you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year.
OK, Jay Powell pushing back pretty strongly on the view from the one member, Stephen Miran, that you should have gone 50. Valerie Titel with the market reaction and what to watch for going forward. Val, I guess with the dot plots now signalling 2 further cuts by the end of this year, but divisions clearly amongst the FOMC. We come back to the data and what moves things, what locks things or further cuts in potentially. What are you going to be watching for, and what was your analysis? What were your key takeaways from what we saw and heard from the Fed and Jay Powell?
Well, look, Jerome Powell yesterday clearly said that, yes, the labor market is weakening. Risks have risen, but inflation is still a problem, too. This is going to lead the market to not just look at the labor market, but also keep an eye on the inflation picture. He did mention in that clip there that the dual mandate is moving closer to equality, but it's not there yet. And in some way, that's giving us the hint that inflation is still a major worry on Jerome Powell's mind. Now, when it came to the dot plot, what was really surprising, Tom, was the amount of dispersion in the dot plot. Yes, the consensus, the median dot, is showing 2 rate reductions into the end of the year. That in some way gave some solace to the markets, why we saw the bond market rally after the release of the projections. But you do have Stephen Miran's dot hanging out all by its own. He not only wanted a 50 basis point rate reduction in yesterday's decision, but he also wanted one in the October decision and the one in December. So clearly he is thinking that this is a market that needs rate reductions. And we thought we would hear something similar from Fed Governor Chris Waller, but he did not dissent alongside the new governor, Stephen Miran. Perhaps he was maybe perturbed by the hot retail sales figure that we had 2 days ago, but he's not been able to convince the Fed chair either that there is a sense of urgency. And I think that's what led people to believe that the press conference was hawkish. Right there in the clip that you heard, he was asked about the 50 basis point rate reduction. He says you tend to do those when you feel that policy is way out of whack and you need to adjust quickly. That is not at all what I feel. And it doesn't seem at all that's what Christopher Waller or Governor Bowman feel at all. Those are the two that dissented in the previous decision. But net, Tom, not a lot of surprises here to shake up the market. Yes, there was some volatility around the decision yesterday, but take a look at 2-year yields. We're essentially trading unchanged from the Fed decision.
Val, you make me almost feel sorry for Stephen Miran's lonely dot down there on the chart, all alone. Valerie Titel, let's see if that changes in the months ahead. Valerie Titel breaking down what we heard, of course, from the Fed and Jay Powell. Thank you very much indeed. And the market reaction. Now, US Treasury Secretary Scott Bessent once agreed to occupy 2 different houses as his principal residence at the same time, according to mortgage documents. It is a similar contradictory pledge that President Donald Trump has been using to try and oust Federal Reserve Governor Lisa Cook. There is no sign of any wrongdoing on Bessent's part, and there are differences in the two cases, but it does demonstrate that a discrepancy in home loan filings isn't necessarily proof of fraud, an accusation that has been levelled against Cook. Both of Bessent's mortgage agreements were signed by a lawyer, Charles Rich, who had power of attorney. He said there was, quote, absolutely nothing improper and that Bessent was, quote, only minimally involved. Cook is challenging her ouster in court, where she said the allegations against her are false. Now to the Bank of England, set to make its decision on interest rates later today, of course, and expected to hold the MPC, widely expected to keep the benchmark rate at 4%. The focus arguably turning to its quantitative tightening programme amid concerns that its gilt sales are worsening volatility in the bond market. For more, I'm joined now by Sonali Punhani, UK economist at Bank of America. Sonali, we'll get to your views on QT for the central bank and whether they start to pare that back a bit. But I want to start on your views around the BOE, arguably beyond today, given expectations they don't move. You think the window is still open for the Bank of England to cut once again this year and then again next year. Why is that?
Yeah, sure. Hi. I think there is some small window for the Bank of England to cut in November. I mean, we think that, we are seeing continued weakness in the labor market. Pay growth is moderating actually quicker than the Bank of England's forecast. And yesterday, I mean, we did see a bit of a downside surprise in services and food inflation. So I think these things could keep the door open for a November cut. We also have, this potential fiscal consolidation that is likely to come in the autumn budget. Now, of course, we don't know the size of it and how big it's going to be, but we do know that downside growth risks from this fiscal consolidation are potentially are still possible. So I think these things could potentially tilt towards a November cut. But as I said, I think it's a fairly close call. We are more kind of certain on the fact that the BOE will cut more. So we have a terminal rate of 3.5. So we expect 2 more cuts. So we have more conviction on the view that there'll be more cuts rather than the timing. You could see that, the bank maybe wants to see a bit more evidence of some of the inflationary pressures coming down before making the next move. So less certainty on the timing, but more certainty on the end point, which is 3.5%.
OK, so a little bit less timing, a little bit less certainty on the timing, but on the end point, 3.5%. Sonali, what specifically within the data mix do you think gets the Bank of England to a position where it can cut again this year?
Yeah, I mean, I think it's the labor market data, right? So it's the continued weakness in the labor market and also seeing some moderation in pay growth. I think those are the things that could get them to cut. Also, if, the sort of we don't see upside surprises in inflation. I mean, they obviously have inflation going up to 4% in September. We have a slightly lower peak of inflation at 3.9. So if we do see that, some of those those increase in inflation does not materialize as much as what the Bank of England is expecting, then that could be one. And I think more important is, this worry that the bank has about second round effects and the fact that higher inflation could lead to second round effects. I am less worried about that, to be honest, because I do think that the labor market backdrop today is very different from the one we had a few months ago, where the labor market was extremely tight and consumers were able to pass through any kind of, were able to pass through this to wages by asking for higher wages, the higher prices. I think given the fact that we have a weaker labor market, I think that means that the probability or the kind of, the probability of second round effects happening and these price increasing getting transferred to wages is much less likely in this scenario.
And Sonali, just to zero in on your view that the neutral rate for the BOE lands at 3.5%, does that suggest that you see structurally higher inflation in the UK? With a neutral rate at 3.5%, what underpins that view?
Yeah, I mean, I think in the past as well, we've seen that the UK has had, I mean, obviously, if you go back before the global financial crisis, we've seen that the UK has had high interest rates relative to other economies. And then after that, of course, it was very similar to other economies, but, UK did have higher inflation. So I do think that, we do need higher rates to keep the overall inflation under control. And beyond that, I think even post-Brexit and post the COVID, there have been some structural changes in the labor market. We still see shortages shortages in certain sectors where we could see that, where wage pressures are still there. And I think Brexit has in some way increased and exacerbated those shortages. So I do think that we have a bit more inflationary economy now. Also, some of the, kind of policy changes that have been made, things like, increased national living wage, national insurance contributions, all of these are also making, sort of the labor market a bit more inflationary. So I do think that the neutral, in some sense, has increased relative to pre-COVID levels. We also have higher government debts, which is something that, also adds to neutral. So I think all of that means that we settle at a higher rate compared to before.
Sonali, on the question of QT, quantitative tightening, how far do you think the Bank of England goes in easing back on the sale of bonds into the market?
Yeah, so we have a call that the Bank of England slows down their QT pace from the current 100 billion to 60 billion. I think, we sort of slightly disagree with the BOE's assumption that they think QT works in the background. We think, it is likely tightening monetary conditions, and it is having a greater impact on market functioning of the gilt market. And so I think it's, our view is that because of those reasons, the Bank of England is likely to pare down on their sort of overall envelope to 60 billion. Now, this one still has, our call still has some active sales. The reason we still keep some active sales is because going forward, the amount of passive sales really fall down. So if they completely get rid of active, then maybe their pace of slowdown of the balance sheet slows down materially in future years. So this is kind of a bit of a balance between, taking into account the concerns of the gilt market, but also keeping their, aim of sort of shrinking down the balance sheet at a reasonable pace.
OK, Sonali Punhani, UK economist at Bank of America, on what to look for when it comes to the BOE decision later today and projecting out towards the end of the year. Sonali, thank you very much indeed with that analysis. Now, King Charles emphasised the long-standing bonds between the US and the UK yesterday, capping a day of pageantry designed, of course, to strengthen a US-UK alliance enduring economic and security headwinds.
Our countries have the closest defence, security and intelligence relationship ever known. In 2 world wars, we fought together to defeat the forces of tyranny. Today, as tyranny once again threatens Europe, we and our allies stand together in support of Ukraine to deter aggression and secure peace.
Well, Bloomberg's Lizzie Burton is in Windsor for us. Lizzie, we hear then from the King after, of course, an announcement, or at least a speech, an address by the US President as well. Today, the focus switching from the King, arguably, to the Prime Minister, Keir Starmer, who's going to be spending a lot of time with President Trump, and then there will be the press conference.
Yes, from pageantry to business, Tom. And round that state banquet table, you also had the biggest names of Wall Street and Silicon Valley. And the hope is that now they've been wined and dined, they're going to open their wallets and unleash the investment on the UK. Keir Starmer's administration telling us that they're going to have a record £150 billion worth of investment in the UK unveiled during this visit. That'll create 7,600 jobs. And this really comes at a time when the UK's economic growth needs that sort of investment. Now, also up for discussion will be the terms of the trade deal. You remember Donald Trump, as he was getting on Air Force One, saying that there was a bit of room to negotiate. We'll see what that actually means. And the King there pushing on Ukraine and on the environment as well. What I don't expect to see, though, Tom, are any major breakthroughs when it comes to geopolitics or trade, or to see Keir Starmer pressing on the issue of the Middle East. In fact, the Times of London reporting that he is going to formally recognise Palestine as a state, but not until the weekend. So after Trump has departed, but before the UN General Assembly meeting in New York next week. Clearly the idea being to avoid a diplomatic incident, but it could still dominate the press conference later on. That and the issue of Jeffrey Epstein, of course, the disgraced deceased financier over whom the Prime Minister has lost his UK ambassador to Washington. And if you were to look at the protests outside that were here yesterday, Palestine and Epstein would be the top issues to come up at the press conference.
OK, Bloomberg's UK correspondent Lizzie Burden looking ahead to that press conference, which, of course, we will broadcast live for you. Lizzie, thank you very much indeed at Windsor. Coming up, France says it will recognise a Palestinian state at the annual United Nations General Assembly. But how viable is the two-state solution? Our big take is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Israeli troops have been pushing deeper into Gaza City as more people flee the devastated area. Palestinians say the strikes have cut off phone and internet services, making it harder for people to call ambulances during the new Israeli offensive. Local health officials say the Palestinian death toll has now surpassed 65,000 people. Israel says it's launched what it calls an intensive military operation towards the heart of Gaza City to confront Hamas. Meanwhile, France says it will use the annual United Nations General Assembly in New York on Monday as a platform to become the first member of an advanced economy to recognise an independent Palestinian state alongside Israel. Several Asian countries, as well as the UK and Canada, may also do the same. But the reality on the ground in Palestinian territories is different. And for many, the flurry of diplomacy probably comes too late. Joining us now is Bloomberg's Foward Hadali from Bethlehem. Foward, what does a Palestinian state look like right now? How realistic is it? You've been doing a deep dive report on this for us. You can get it on Bloomberg.com and on the terminal. Really worth your time. What is the current state of affairs on the ground?
Good morning, Tom. Actually, if we look at the how would the Palestinian state look like, we can look at it from two different ways. One is the visuals that you can see on the ground, the facts on the ground, by meaning if you tour the West Bank from the south to the north, to the east to the west, you can see the change. Settlement expansion, roadblocks, militarized zones, difficulty moving from one place to the other. Within the village or the city itself, you could find yourself coming across several checkpoints, and it could take 4 hours for you to leave visually. And on the other part, if we've talked to a lot of people, from regular citizens to PA officials, and actually the hope is vanishing. Having a two-state solution, this hope is vanishing really quick. And if the international community does not exert the pressure to save this framework that a lot of countries are still believing in, then the Palestinians are going to find themselves in a place that they don't want to be. Talking to people, how hope it's vanishing. People want to move around. People want to go visit family. People want to go to the doctors. People want to go to school. All this is impacting the daily life of Palestinians. Not to forget the economic and financial strain that it's also has been exerted on the Palestinian Authority for the last few years. So dramatically, the facts on the ground, it's changing. And not to forget, the war in Gaza has weighed in a lot on the West Bank. So without a political will from both parties, the facts on the ground is completely going to deteriorate. And without hostages being brought back home, none of these things will just be deteriorating more and more.
So Foward, does the recognition by France and possibly others of a Palestinian state, would that change the equation?
Well, it's an attempt by these countries. You know, it's a step too late. For years and years, Palestinians have been hoping for a Palestinian state. They have lost trust in the international community, in their government, and this is a last attempt, actually, if they want to revive the two-state solution. But again, a lot of countries can recognize, those countries that have not recognized Palestine yet, they can do that. But again, without a political will from both sides, none of this can take place. You cannot see the birth of a Palestinian state. You have to have a political will. This is a pressure by the Europeans, a pressure by the international community on Israel, on the U.S. administration, on the region. We've seen a lot of changes after, with what's happened in Gaza. So it has reshaped the whole region. So Palestinians hope that they can get this recognition and there can be a move forward for a Palestinian state. But again, I can say, talking to people and talking to officials, hope is really, really vanishing in regards to that.
Possibly too little, too late. Bloomberg's Foward Hadali, thank you very much indeed. Important reporting, of course, that you can find on Bloomberg.com and on the terminal. Thank you. There's a lot more coming up. Stay with us as we look ahead to the BOE and continue to digest that move from the Fed. This is Bloomberg. Welcome back. So markets continuing, of course, to digest what we saw from the Fed yesterday. Yes, they came through with the first cut of the year, 25 basis points. And yes, interestingly, there was less dissent from the FOMC than someone expected, with just Stephen Miran, the one vote for a 50 basis point cut, and Jay Powell pushing back firmly on the view that that was necessary, a 50 basis points. Here's the dot plot, though, and this is a reminder of how split the views are, though, going forward. This lonely dot here, Stephen Miran, pushing for more than 100 basis points of cuts. The view, though, split when it comes to the est of this year, with 6 voters expecting no additional change, 9 expecting that you get a further 2. So the dot plot's pricing in 2, but the divisions are there, of course. Let's flip the board, talking of Miran, and think about what this could mean if you get a more dovish Fed, and if Miran's influence grows, and maybe if he becomes a real candidate for the Fed governorship itself, what it means for the small caps, the Russell 2000s, because that could really benefit, of course, that index and those small cap names within the equity space from a more dovish Fed. So look at the potential catch-up on the Russell 2000 and briefly checking in on the BOE and the conundrum around QT, whether or not they start to roll off slightly less into the markets on volatility risks. The opening trade is up next. This is Bloomberg.